Okay, I'm going to tell you something right now that most real estate channels are absolutely terrified to admit about investing in New York.
And listen, that's not just my opinion. It's a cold, hard fact. And it's not because New York is some impossible market. No, they fail for one simple and kind of brutal reason. They're using a playbook that was written for, I don't know, Kansas City. I mean, you're walking into the most complicated, specialized market in the entire country with generic advice. It's like bringing a knife to a gunfight. It's just a complete recipe for disaster. See, New York plays by its own set of rules. We're talking about tenant laws that can lock a nightmare tenant into your property for more than a year. We're talking about closing costs that online calculators just completely mess. And there are legal traps that can literally nuke a property's profitability forever. So yeah, this isn't that generic stuff. This is the real New York playbook. So, if you're a beginner in this kind of high-stakes game, what's your first move? It's definitely not just buying the first thing that pops up on Zillow. No. To win here, you need a strategy that is absolutely laser-focused on keeping your risk and your cash as low as possible. And that strategy, it's called wholesaling. It is by far the best way to get in the game without a ton of capital. Here's the deal. Instead of actually buying the property, you just find a good one, get it under contract, and then you sell that contract to a cash buyer for a fee. You're basically a deal matchmaker. It's an amazing way to learn the ropes and make some cash without ever having to own the property yourself. Okay, so this breaks it down pretty simply. First, you get a mentor. Seriously, in New York, this is not optional. Then you build your list of cash buyers. These are the investors who are ready to pull the trigger. Once you know who's buying, you go out and find the motivated sellers. You lock in a price, and then you just assign that contract over to someone on your buyer's list. Boom. You get paid at closing, and your own money was never on the line. It's the absolute best way to get your foot in the door. All right, now here's where things get really interesting. New York isn't just one market, right? It's like dozens of completely different markets all crammed into one state. A strategy that absolutely kills it in Buffalo, that same strategy will get you eaten alive in Brooklyn. So where you decide to invest is every bit as important as how you invest. So let's take a look at this. The NYC outer boroughs, yeah, the rental demand is off the charts, but the prices? Whoa, it's a risky play for a beginner. But now, check out upstate, places like Buffalo and Rochester. The prices are way, way lower. The rental demand is still really solid, and they're just so much more friendly for someone starting out. This is where you're going to find the deals that have better margins and a lot less risk. Okay, seriously, stop what you're doing for a second and listen up. This next part could literally save you tens, maybe even hundreds of thousands of dollars. We're about to talk about the hidden landmines that are unique to New York, the ones that blow up deals for investors who don't know what they're doing. Let's kick this off with the big one. Have you ever heard of the rent stabilization trap? Because let me tell you, it is the number one biggest danger for anyone looking to buy a multifamily property in New York City, period. So here's how it works. For a lot of buildings built before 1974 that have 6 or more apartments, there's a law that can permanently cap your rent. Just think about that. Imagine you pay full price for a building, you're all excited, and then you find out you can never raise the rents to what they should be. It is a complete financial nightmare, and so many beginners walk right into it. So how do you avoid this disaster? It's all about doing your homework, your due diligence. For any building built before 74 with 6+ units, you have to go to the DHCR website. That's the Division of Housing and Community Renewal. You can pull the building's entire rent history. And if you see even one stabilized unit on there, you have to run your numbers as if that income is stuck there forever. I mean it. No exceptions. All right, moving on to the next lovely New York surprise. Let's call it closing cost shock. Picture this. You've saved up your down payment. You've run all your numbers, you think you're good to go, and then your attorney emails you that final closing statement. On a pretty standard, say, $650,000 place in Queens, you could be looking at 32 grand. Yep, $32,000 in closing costs. And just to be clear, that is not your down payment. That's on top of it. A number like that just completely knocks beginners right out of the game. So why is it so crazy high? Well, it's this special cocktail of New York-only taxes and fees. You've got the mansion tax on pricier properties, a big old mortgage recording tax, some of the most expensive title insurance in the entire country, and you have to pay for an attorney. So just burn this into your brain. When you're budgeting for a New York deal, it's your down payment plus a whole other 5 to 8% just to get the keys.
Okay, so after all these warnings, you're probably wondering, how does anyone actually make it here? The secret is understanding that building wealth in New York real estate isn't a get-rich-quick thing. It's a marathon, not a sprint. It's all about discipline and patience. Let me show you what that path actually looks like, for real. Here it is. This is the timeline. Year one, you're just trying to get in the game. Maybe a house hack or a wholesale deal to get some cash flow. Then, for the next couple of years, you're just stabilizing, saving up, and becoming a total expert in one specific neighborhood. It's not until maybe year 4 or 5 that you're really ready to buy a dedicated investment property. And from there on out, it's just a slow, steady, systematic process of scaling up your portfolio. See, this is what real wealth creation looks like in a market like New York. It's not about hitting one big home run. It's not some flashy fix and flip you see on TV. It is all about doing the right things over and over and over again. It's about discipline, and it's about letting time and the market do most of the heavy lifting for you. Look, just by watching this all the way through, you are already way ahead of like 90% of the people trying to invest in New York. The next step for you isn't to watch another video, it's to start doing. Pick one market, just one, and start analyzing deals. That's where the real learning happens. So I gotta ask, which New York market are you looking at? Drop it in the comments. Are you thinking the Bronx, Buffalo, Rochester? I'm really curious to see where you're gonna make your move.